Working from a laptop anywhere in the world, answering to no one, and achieving total freedom. It's the ultimate pitch for trading Forex full-time. But scroll through social media and you'll see a dangerous narrative. The idea that you can take $500, flip it overnight, and replace your 9 to 5. That rented Lamborghini fantasy violently clashes with the actual mathematics of the financial markets. Look at this matrix. The left is the myth, small accounts needing massive returns to survive. The right is the math, capitalized accounts targeting a steady 2 to 5%. We'll walk through the exact calculations and capital required to build a sustainable trading career. Reaching those numbers means accepting strict discipline and extreme psychological trade-offs that most beginners ignore. Transitioning to a professional trader doesn't require finding a secret indicator. It requires balancing a strict mathematical equation between your capital and your risk. Every sustainable income starts with one primary input, your starting capital. Look at a $10,000 account. An excellent 3% monthly return yields just $300. After fees, that's side hustle money, not rent. To squeeze a $3,000 living wage from that same account, you're forcing an impossible 30% return every single month. Chasing those massive percentages to compensate for low capital requires you to max out your leverage. Mathematically, that guarantees you will eventually blow up the account. Now look at a properly funded $100,000 account on the same chart. Hitting that exact same 3% target safely generates $3,000. That larger capital base allows you to generate a livable income without violating your safety boundaries. Your capital size dictates your reality. Trying to extract a full-time salary from an underfunded account will inevitably lead to financial ruin. Even the best systems go through a drawdown, a peak to trough decline in your overall account value. Losing streaks are unavoidable. To survive them, professionals rely on an absolute shield. They never risk more than 0.5% to 1% of their total capital on a single trade. It is a non-negotiable boundary. This chart tracks a 5-trade losing streak. With an amateur 10% risk model, the red line plummets, wiping out half your capital. Watch the green line. Applying a 1% risk model, you take shallow steps down, retaining over 95% of your value. Using this shield requires a tough psychological trade-off. You have to accept slower, unglamorous account growth and entirely ignore the urge to get rich quick. A proven statistical edge over the market is useless if you don't have enough capital left to execute the next setup. Strict risk management is your ultimate survival tool. You trade the thrill of explosive short-term gains for guaranteed longevity in the market. To survive the math, you have to stop acting like a gambler hoping for a lucky break and start operating as a trading CEO. That means treating your daily execution like a data entry job. You need a statistical edge built entirely on rigorous backtesting and forward testing, not intuition. The psychological overhead is intense. You must execute your trading plan on your 5th losing trade just as robotically as your first, while actively swallowing your fear and greed. You have real business overhead, platform fees, subscriptions, and tax accounting. But the most critical requirement for full-time trading is a massive cash safety net. Having 6 to 12 months of living expenses saved in cash removes the pressure to trade just to pay rent. When your bills are covered, you effectively neutralize the emotional mistakes born from desperation. The true cost of a Forex career is the extreme emotional discipline and the rigid business infrastructure required to protect your capital. Generating a living from Forex is highly realistic, provided you treat it strictly as a capitalized, performance-based business. To see where you stand right now, take a look at this matrix mapping capital against discipline. If you fall into this bottom left quadrant, you need to hold off on full-time trading. If you have less than $50,000 in capital, face immediate financial pressure, or are relying on hope instead of a tested strategy, keep it as a side hustle while you learn. The math only works in your favor when you move to the top right quadrant. This is the viable profile. You are well capitalized, you separate your self-worth from your daily profit and loss, you target a realistic 2 to 5% a month, and you enforce unbreakable 1% risk boundaries. Before you risk real money, you need to build out your professional infrastructure and prove your statistical edge. Open a free demo account with FXNX today. You can backtest your strategy using advanced charting tools and zero-pip spreads. The link is in the description. The market only rewards those who respect the math. Make sure your numbers align before you take the leap.